So welcome back everybody, and let's talk a little bit about how refinance loans actually work. So here in this first chart, you can see how non-refinance or non-subsidized loan work. Here you can see in the first row that the margin of it, let's say it should be 2%. The base rate for a certain day is 5%. It has a 2% upfront fee, and I don't know, 1% other fees. And if you add them up, so these rows, then you can see that the total payback by the client is 10% of the loan. So therefore, the bank earns a 10% return on the loan if the loan is non-refinanced or subsidized. Let's see another example: refinanced or subsidized loans. Well, in this case, the margin is also 2%, like in the same case, which is paid by the client directly to the bank. But in this case, as the interest rate environment is high, then the state subsidy 7%, because here the state actually compensates the bank because the 2% margin is too low, but the client wouldn't be able to actually pay higher because we are now in a crisis. And if you add up these two, then you can see it's altogether 9%, which is earned by the bank, which is very good actually in such economic circumstances. And let's say we still have a 2% upfront fee. So here in this case, if you add up these two, we can see that the bank earns 11%, and the total payable, the client is only 4%. So in this case, the client also pays a lower fee, and the bank still earns a high fee. Thanks here to the 14th row, which is the most important, which is the which is the state subsidy. And here now you can see that how important is the economic help of the state and the government throughout such economic times.